How do you stay calm when the world seems to be falling apart? That's a question I've asked myself more than once over the years. And maybe you've asked it too, especially when you turn on the news and see headlines about inflation, tariffs, or the economy going haywire. But let me tell you a little secret. The people who do well over time, the ones who build real wealth, aren't the ones who panic when the world shakes. They're the ones who take a breath, step back, and ask, and then what? Let's take a walk through that together. 1. Inflation and tariffs are just part of the journey. First, let's talk about inflation. That word gets thrown around a lot, doesn't it? Sounds complicated, but here's what it really means. Over time, things get more expensive. That's it. Bread, milk, your morning coffee, it all costs a bit more each year. Not because someone's out to get you, but because that's how our economy works. Now, tariffs, those are like hidden taxes. If a country puts a tariff on something like imported shoes, guess who ends up paying for it? Not the government. You do. It shows up in the price tag. So when people talk about these big, scary-sounding economic ideas, just remember they're not magic. They affect everyday folks like you and me. But here's the good news. If you understand them, you can stay calm and keep moving forward. Just type 1 in the comments if this is starting to make more sense now. Let's keep going. 2, the most important question every investor should ask. Back when I was a young man, I learned something that stuck with me for life. Anytime something happens, whether it's in the stock market or the world around us, I always ask, and then what? Because the first reaction is rarely the whole story. When prices rise or the market dips, most people panic, they sell, they worry. But if you zoom out and ask that one little question, what happens next? You'll start to see a different picture. Think of it like this. If you're flying through a storm, do you jump out of the plane or do you trust the pilot and wait for clear skies? Investing is a lot like that. Storms will come, but history shows again and again that clear skies follow. 3, my father's story and the power of perspective. Let me share a personal story. During the Great Depression, my father lost his job. He was selling stocks at a time when no one wanted to buy them. The market had dropped nearly in half, and things looked bleak. I remember how hard it was for him. He stayed home, trying to find a way to provide. Our family felt the weight of those days, but that experience taught me something priceless. Even in the worst of times, the American spirit doesn't quit. The economy didn't stay down. People found their way back, and those who held on, not just financially, but emotionally, came out stronger on the other side. And that's what I want to share with you today. No matter what you see on the news or hear in the headlines, don't lose faith. Keep learning, stay curious, and most importantly, stay invested in your own future. You don't need to be a genius to succeed. You just need patience, perspective, and a bit of courage to ride through the storms. Try asking yourself, and then what? Next time things feel uncertain, it might just change the way you see the world. Let me ask you something. Have you ever seen folks rushing out of a store during a sale? Sounds strange, doesn't it? Imagine a sign that says 50% off everything, and instead of walking in to buy, people start running out like something's wrong. Well, that's exactly what happens in the stock market. When prices drop, most people panic and sell. But here's the thing, the market going down is like a big sale. The same businesses you liked yesterday are now on discount. And if they're good businesses, why wouldn't you want to own more of them while they're cheap? 4, the best time to buy is when others are scared. I'll never forget one of the biggest lessons I learned in my early years. It was during a downturn, and everyone around me was nervous. Stocks were dropping, the headlines were grim, and people were saying the sky was falling. But I remembered a simple idea. Be fearful when others are greedy, and be greedy when others are fearful. That doesn't mean jumping into just anything. It means doing your homework, knowing the value of what you're buying, and recognizing that fear often creates opportunity. Imagine a favorite restaurant you've loved for years. Great food, loyal customers, solid reputation. Now imagine the owner, for some reason, decides to sell you part of the business at half the usual price because the food got worse, but because he's scared of the economy. Would you walk away from that or lean in? If you understand the business and you believe in it, you take the deal. That's how I view stocks real businesses run by real people, not just numbers on a screen. If this idea feels new or eye-opening, just type yes in the comments. That tells me you're right here with me. 5, the power of long-term thinking. Now let's talk about time. Most people think about the next week or maybe the next quarter, but wealth doesn't grow overnight. It grows steadily over years. When you plant a tree, you don't dig it up every few months to see if it's growing. You water it, give it sunlight, and let time do the work. Investing is no different. Every time the market dips, it tests your patience. But history has shown that those who stay the course, who keep planting and tending, are the ones who enjoy the shade later on. I've seen it happen too many times to count. Folks who invested regularly didn't panic and just kept going. They didn't just do well, they built peace of mind. And isn't that what we all want? 6, it's not about timing the market, but time in the market. Here's another truth I've learned from decades of investing. It's not about picking the perfect moment to jump in or out. It's about being in the market consistently. Trying to predict the ups and downs, what they call timing the market, is a bit like trying to catch every green light in traffic. Sure, you might hit a few, but you're just as likely to sit at a red, getting frustrated. Instead, think of investing like a good road trip. Steady pace, eyes on the horizon, and trust that you'll get where you're going. If you invest a little each month, stay focused on businesses you understand and believe in, and don't let emotions run the show. You'll be miles ahead before you know it. And I'll tell you this from the heart. Investing isn't just about money. It's about building something that lasts. It's about freedom, security, and leaving something better behind for the ones you love. So what do you say? Are you starting to see how staying calm and thinking long-term can turn a scary dip into a powerful opportunity? In the next part, we'll explore how to choose the kinds of businesses worth owning, even during a downturn, and why some companies feel like family over time. Let me ask you something simple but important. If you had the chance to own a small piece of any business in your town, which one would you choose? Maybe it's that family-owned diner that's always full, or the neighborhood hardware store that's been there for 40 years and knows everyone by name. Why would you choose that place? Because it's steady, it's trustworthy, and it delivers something people need day in and day out. That, my friend, is exactly how I think about buying stocks. You're not just buying paper, you're becoming part owner in a real business. And if that business is strong, reliable, and well managed, it's worth owning for the long haul. 7, invest in businesses you understand and believe in. Here's one of the simplest rules I follow. Don't invest in something you don't understand. If someone tries to sell you a fancy stock with a complicated name and you can't explain how that company makes money in 1 or 2 sentences, step back. You wouldn't buy a mystery meat sandwich, so don't buy a mystery business. Instead, look for businesses you understand, things people use every day: food, medicine, utilities, good banks, trusted brands that have stood the test of time. I remember years ago, someone asked me why I bought into a well-known soft drink company. The answer was simple. People love it, they drink it every day, and the company had a solid reputation and a strong business model. I could see it still being around 10, 20, even 50 years later. That's the kind of thinking that builds wealth slow and steady. Let me ask you this. What's a product or service you've used for years and still trust today? Share it in the comments with a quick yes or the name. You might be surprised how many strong companies start from those everyday things. 8, great businesses keep earning even during tough times. During hard times, people might cut back on luxury cars or fancy vacations, but they still brush their teeth, eat breakfast, take medicine, and use electricity. That's why some companies keep earning, no matter what the economy is doing. These are the businesses I love to own. Think of it this way. If you're choosing a horse to ride through a storm, you don't want the fastest. You want the one that won't spook when the wind picks up. Solid, dependable, calm under pressure. And it's not just about size, it's about consistency. A company that grows slowly and steadily, treats its customers well, and knows how to make a profit year after year, that's gold. I once bought shares in a small insurance company. Nothing flashy, but it was run by people who understood risk better than anyone I knew. Through good years and bad, they stayed disciplined, focused, and smart. Over time, that quiet strength paid off handsomely. 9, the people behind the business matter more than you think. Let me tell you a little secret. Even the best idea won't work without the right people running it. When I invest, I look at the leadership. Are they honest? Are they careful with money? Do they care about the company's future or just the next quarter? I passed up good opportunities because I didn't trust the people at the top. And I've said yes to boring-sounding businesses because I believed in the folks running them. Imagine you were handing over your life savings to someone to run your family's general store. Wouldn't you want to know they're responsible, trustworthy, and thoughtful with every decision? Well, that's what investing is. You're trusting people to grow your money. So choose wisely. Now, we've covered a lot, haven't we? You've learned that market dips are often hidden opportunities, and that the real key isn't chasing hot tips. It's understanding the business, trusting the people behind it, and thinking long-term. In the next part, we'll look at how to put it all together. We'll talk about building a small, simple portfolio that grows over time and how to get started, even if you've never bought a single stock before. Stick with me. The journey's just getting better. How to build a simple, strong investment portfolio that grows with you. Let me ask you something that might surprise you. If you were building a house, would you want it to be fancy, or would you want it to stand the test of time? Most people pick fancy when they're chasing stocks. They try to build a mansion overnight with flashy, fast-moving companies they barely understand. But real investing, that's more like building a cabin in the woods. Strong foundation, simple layout, cozy, dependable, and still standing decades later. So let's start laying that foundation. 10, start small and keep it simple. You don't need to start with a pile of money. What you need is consistency. A little bit invested regularly can turn into something meaningful over time. It's like planting a tree. You water it a little each week, and before you know it, there's shade over your whole yard. I once knew a woman who worked as a school librarian. Every month, she bought just a small handful of shares in a few well-known companies, ones she understood, trusted, and liked. No big risks. No wild guesses. By the time she retired, she had built herself a comfortable nest egg, one she never thought possible on her salary, all because she started small and kept going. You can do that too. And if you've already passed retirement age, guess what? It's still not too late. Because investing isn't just about growing, it's about protecting what you've worked hard to earn. So what are some simple places to begin? 11, own a little bit of America. I always say, never bet against America. And one of the easiest ways to invest in its growth is through an index fund, something like the S&P 500. It's a simple way to own a tiny piece of hundreds of successful U.S. companies, all in one go. Think of it like a big fruit basket. Instead of picking one apple and hoping it's the best, you're holding a bit of the whole harvest. Index funds don't require a lot of thinking. They don't charge much in fees, and they quietly grow over time, just like a good habit. That's why I often recommend them for folks who want to invest without the stress of picking individual stocks. If you've never looked into index funds before, leave a quick yes in the comments so I know this is helpful. I promise to make it even simpler for you next time. 12, stay the course. Don't let the noise knock you off. Here's the final piece. Once you've started, stick with it. The market will rise, it'll fall, headlines will scream, pundits will panic, but your job is to remember why you started. You're not here to win the lottery. You're here to build something strong, steady, and meaningful. I've held some stocks for decades, not because I never had the urge to sell, but because I knew patience would pay off. Think about it like baking bread. If you open the oven every 5 minutes, the loaf never rises. But if you trust the process, you'll have something warm and wonderful at the end. I always tell folks, if you wouldn't be comfortable owning a stock for 10 years, don't think about owning it for 10 minutes. Now you've got the basics, a calm mindset, a smart way to choose companies, and a simple approach to building your portfolio. That's powerful stuff. In the final part, we're going to wrap it all up and talk about the joy of leaving a legacy, how investing isn't just about you, but about the people and values you pass on. Because the true reward of wise investing, it's not just dollars and cents, it's freedom, it's peace, it's knowing you've left the world a little better than you found it. If you've made it this far, I want you to know you're already well ahead of most folks. You're not just learning about money, you're shaping a mindset that brings peace, purpose, and possibility into your life. So let me ask you something from the heart. What kind of legacy do you want to leave behind? I don't mean just money in the bank. I mean the kind of example that echoes for generations. The kind that says, I didn't just live, I lived wisely. I planted seeds for others. That, my friend, is where true investing becomes something bigger than you and me. 13. Investing is a love letter to the future. I once had lunch with a gentleman who grew up in the Great Depression. He told me something I'll never forget. He said, Warren, when I invest, I'm writing a letter to my grandchildren telling them that I believed in their tomorrow. Isn't that beautiful? Whether it's your children, grandchildren, nieces and nephews, or simply a cause you care about, you can turn your investments into something that lives beyond you. It's not about being rich. It's about being thoughtful. It's about planting a tree whose shade you may never sit under, but knowing someone else will. And here's the good news. You don't need to have millions to leave a mark. A small, consistent investment in the right place, paired with time and love, can create something lasting, something meaningful. 14. Teach as you grow, share the wisdom. One of the greatest joys in life is sharing what you've learned. If you follow the steps we've talked about, if you've started building your portfolio, choosing companies wisely, and staying patient, you've got more experience than you think. Tell your story. Teach your family how to think about money, not with fear, but with confidence. Show them that it's not about chasing fast wins, but building something real, something steady. I once taught a young friend how to invest just by having him shadow me for a few months. Today, he's teaching his own kids. That's the power of knowledge passed down, not in textbooks, but in conversations. If you're planning to talk to someone about money this week, whether it's a friend or a grandchild, drop a quick one in the comments. I'd love to cheer you on. 15. Make it part of your joy, not your stress. Finally, let's talk about peace. I believe the best investments are the ones that let you sleep well at night. They don't give you ulcers. They give you clarity. When you invest in things you understand, when you stay the course, when you focus on what matters, you stop worrying about what the market does today or tomorrow. You start looking forward to your days. You start smiling when you see your statements, not because the numbers are huge, but because they reflect you, your decisions, your values, your steady hand. And you begin to live life with a different rhythm, one that's slower, sweeter, filled with gratitude. So there we have it. We started this journey talking about mindset, why a calm and clear head is the first key to success. We explored how to choose businesses that last, how to build a simple but strong portfolio, and now how to turn all that wisdom into a meaningful legacy. Let me leave you with this. The stock market may rise and fall. Companies may come and go. But you, with your courage, your care, your willingness to learn, are timeless. And if you keep going, step by step, I promise your future self will thank you. And so will the ones you love. Now go on, take one small action today. Maybe it's setting up your first index fund. Maybe it's teaching your grandchild the power of compound growth. Or maybe it's just smiling, knowing you've begun a beautiful new chapter. And if this journey inspired you even a little, share it with someone you care about. That right there might be the best investment you ever make.